CPI inflation for April fell to 4.7%. Policymakers across the country expected a more dovish stance from Reserve Bank of India. This hope, however, has been flattened by the Monetary Policy Committee, who have maintained a status quo on policy rates and pushed the goalpost further with respect to reversing the rate cycle. There has been a repeat statement by the governor, perhaps not without reason, that the policy rate cycle is at pause and not pivoting. I feel that during RBI's monetary policy resolution announcement in Mumbai yesterday, the southwest monsoon swept over Kerala. Despite its 8-day delay, the monsoon is still on schedule. On the west coast of India, it would have crossed Goa by now in a normal year. But the southwest monsoon usually affects the RBI's assessment of inflation. Its decision to keep its policy rate, Repo, constant at 6.5% was, of course, widely expected by those who have been keenly watching the stance of various central banks across the world. Furthermore, there was a subtle indication indicating that policy rates will not be cut in the near future. Based on the Reserve Bank of India's inflation projections for FY24 at 5.1% and for the four quarters of this fiscal year at 4.6%, 5.2%, 5.4%, and 5.4% respectively, the rate cuts appear unlikely until next year. There are challenging conditions globally with nebulous growth, sticky inflation, and turbulent financial markets, which have led to the RBI's watchful response regarding future policy moves. Though India's retail inflation cooled off over the last 2 months, partly on account of lower food prices. However, among food items, the price trend hasn't been uniform. Milk is dealing with supply challenges, and in fact, RBI has highlighted the supply challenges on the part of milk. Also, cereals have been on an inflationary trend of double digits for a while. This is where the monsoon comes into play, as rice is the most important cereal by output. Government of India data showed that in 2022-23, paddy output was a record 135.5 million tons. However, preliminary acreage data for this year was worrisome. It is imperative that central bank remains aware of what a continued high interest rate will mean for the consumption despite these real compulsions. Interest rates in the economy will rise further as a result of the central bank's bid to keep system liquidity neutral by holding money market rates close to the repo rate. Despite the booming service sector in urban areas, rural demand has been slowing. There was only a 1% growth in priority housing loans in FY23 compared to a 23% growth in non-priority housing loans, which could hurt borrowers with lower income profiles. In spite of RBI maintaining growth at 6.5% for FY24, low-income households may be left out in the whole process. On agricultural front, on June 2, paddy acreage was 2.17 lakh hectares, a decline of 26.5% in relation to the previous year. The delay in the onset of the monsoon is bound to have influenced the low acreage. In this backdrop, it is pertinent that Government of India accepted the recommendation of the Commission for Agricultural Costs and Prices to enhance paddy's MSP for the current Kharif season by 7% to rupees 2183 per quintal. It's too early to gauge the impact of the monsoon on agricultural prices. What's certain is that the regional pattern of rainfall and its volume in July 2023 will have a significant bearing on food inflation. Besides the monsoon, RBI's policy statement yesterday also showed that firms expect inflation to trend upwards. The early results of the central bank survey of firms showed that they expect both input costs and output prices to harden. Given these uncertainties, RBI's average inflation forecast for 2023-24 was 5.1%, a tad lower than what it expected 2 months ago. In short, the economy is not at past the point where inflation is no longer a threat to the macroeconomic stability of the country. However, on the supply side, price cooling levers are all in the hands of Government of India. RBI's interest rate weapon can't and should not be used anytime soon. That's where we can comfortably conclude that rate cuts are unlikely in the near future despite the perception of the falling inflation, but considering the future prospects of the monsoon, the agricultural yields, and various economic parameters, it's not safe yet to conclude that inflation is a settled matter. It may resurrect again. That's the reason the uncertainty on the part of rate cuts. Hope the information is useful to you all. Thank you very much.